Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, April 27, 2018, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen. Although gold closed higher on the day, it did close lower on the week now for the second consecutive week, but at least for today, up $6.20 at $13.2410. We have noticed a couple of candlestick patterns in both gold as well as the dollar that could be indicating a key reversal will occur next week. Silver down about 2 cents, 16.47, and the dollar in essence unchanged at 91.32. Dow in essence unchanged, down 11 points at 94.33, and Palladium down about $16 at $963 an ounce. More on that when we pull up our Palladium trade. As far as Bitcoin futures are concerned, lower by about $100, 89.80 and 89.70 in the CBOE and CME futures exchanges. Traders, an extremely interesting week when it comes to the precious metals as well as the dollar index. Gold did close higher on the day. However, it did close lower on the week now for the second consecutive week. You can easily see that on this weekly candlestick chart. However, it is daily and 720-minute charts that really begin to reveal. I believe we're going to see a reversal early next week. We are looking at a daily candlestick chart of gold futures, this being the June contract. We can also see the last 5 trading days that have occurred this week, in which 2 of them resulted in higher closes compared to the open, these green candles, and the other 3 resulted in lower trading days. However, collectively, we can identify a couple of different patterns that have occurred in the last few days of trading. On a 2-day pattern, we are looking at a very strong piercing line or an engulfing bullish that has occurred in gold pricing over today and yesterday's trading activity. The fact that these have occurred near a critical Fibonacci harmonics of 1318, a 78% retracement, that is our short data set, simply moving from 1303 up to 1269, and the second data set going from 1258 up to these highs. We also see a 38% retracement occurring in this area, and that is what creates the Fibonacci harmonics, where 2 different time cycles or data sets come to the same conclusion about an important Fibonacci level. The next pattern that we can identify is a pattern that only occurs in a 720-minute chart, and that in essence breaks each trading day down to 2 cycles rather than 1. What you'll see is a 3-river morning star meeting all of the necessary criteria. First, it has occurred after a defined downtrend that began with a large red candle and a short star-shaped candle gapped in the middle, following a large green candle. For this particular pattern or any bullish reversal pattern to have credence where we act upon it, we need to see a confirming candle. A confirming candle for all bullish reversal patterns is that on the following cycle or day, you get a higher high, a higher close, and a green candle, which simply says that the market closed above the open. Traders, therefore, if we see a higher open as trading resumes next week, that will confirm the engulfing bullish single-day pattern as well as the 3-river morning star pattern, and we will initiate a long position in gold. Traders, it is quite obvious that recent weakness in the precious metals complex overall has predominantly been due to dollar strength. We can see our gold weakness right here, daily chart of the US dollar index right here, and you have dollar strength that has really been coming in since the middle of April that has really put some tremendous downside pressure on gold, silver, platinum, and palladium. However, we can identify a particular candlestick pattern today in the dollar index, which is significant and extremely reliable when picking tops and bottoms of the market. And that pattern is simply called a shooting star. A shooting star is part of the umbrella group of candlestick patterns composed of a shooting star or an inverted hammer. The inverted hammer is the identical candlestick type as this, only it is occurring after a defined downtrend, whereas a shooting star is only identified after an uptrend. You can also have a hammer at the bottom or a hangman at the top, and the difference between that is that in a hangman, the real body of the candlestick itself is at the upper end of the range rather than the lower end of the range. The fact that we can identify a shooting star in the dollar and the fact that it occurs at an extremely significant fib level, the 50% retracement of the recent decline from 95 down to 88, that 50% retracement is really indicating a failure for the market to sustain any kind of extended rally moving above this particular price point. We also have a series of bottoms that come in indicating the strength of this as either a support level or a resistance level. But nonetheless, if we see the dollar index open with weakness next week, and if we get a red candle with a lower low and a lower high, that will confirm that what we are about to see is a major reversal in the dollar index. Traders, we did enter a long trade yesterday in Palladium. Palladium under pressure today, off about $16, closing at $9.63. We are in above that particular price point we got in the day before on this candle. We identified a couple of things that showed us the potential for this short correction to terminate. Now, the correction came after a defined uptrend in the market, taking Palladium from 890 up well above 1,000 to 1,047. From there, we had weakness come into the market, and Wednesday's low matched the 0.618% retracement of that rally. When we had a higher up day the following day, meaning yesterday, we put the trade on. We put stops below the low of Wednesday's candle, which means that we have our stops at either 949 or 950. So we did not get stopped out today, and in fact, I do expect firming prices in Palladium should the dollar really go under pressure at the beginning of next week. If that's the case, we might in fact look to add to our current long position in Palladium. Palladium trades in a 50-ounce contract, so we would add another contract for each contract we went long yesterday. More on that to follow as the market opens up next week. Traders, as far as Bitcoin futures are concerned, although they closed up modestly today, they are below $9,000 once again at $8,970. We have been speaking about this pretty resilient rally that occurred mid-April, taking pricing from about 6,400 up to its highs this week at 9,700. Our initial target was simply 9177. That is the 23% retracement level, and that data set that we're using for this retracement set is an extremely long retracement set from 20,000 down to 6,000. So the first level is a pretty critical level, the 23% retracement. We in fact did take that out early this week, but prices have closed once again below that, which to me signals a potential week of weakness in the market. And if that occurs, my target is going to be 8,100. That is based upon the shorter term 50% retracement in Bitcoin futures. Traders, today's report was all about a potential reversal in the dollar, going from extreme strength to a pivot point, moving back into weakness, in other words, a correction. The pattern that we identified, although it's only a single-day pattern, has been remarkably effective at projecting and predicting tops as well as bottoms in the market, the umbrella group. We'll have to see how that unfolds at the beginning of the week, but all signs point to higher precious metals and lower dollar next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.